You ever see a headline that just makes you scratch your head? Like, it just doesn't feel right. Well, that's exactly what happened with the latest jobs report. I mean, on the surface, it looked like the economy was slamming on the brakes, hitting a brick wall. But as we're about to see, the real story, oh, it's way more interesting. It's just hidden right below that surface. So let's dig in and figure out what's really going on here.
So here it is. This was the number that was plastered everywhere for October 2025, negative 105,000. That's a loss of 105,000 jobs. And you know, a number like that, it can really spark some anxiety, right? It makes you wonder, whoa, is the economy suddenly grinding to a halt?
So naturally, when you see a number that big and that negative, the big question pops in your head. Is the US economy actually losing jobs? Are we in trouble here? Is everything starting to shrink? Well, that's exactly what we're going to figure out. Let's get into the data and see if we can crack this mystery.
Okay, so to get to the bottom of this, we've got to start with the headline numbers that came out. And right off the bat, you're going to see why this whole thing was so confusing.
I mean, just look at this wild swing. In October, the economy sheds 105,000 jobs. But then, the very next month, boom, we gain 64,000. That's not a clear trend at all. It's a total puzzle. And the only way you solve a puzzle is by looking at all the different pieces.
And that first piece of the puzzle, honestly, it's the most dramatic one. It's all about what was happening with government jobs.
Okay, check this out. This is the first really big clue. In just 3 months, the federal government cut 172,000 jobs. I mean, that is a massive number. And once you know that, it completely changes how you look at that scary headline number we started with.
So what's going on here? Well, the crucial point is this wasn't some kind of organic economic slowdown. No. According to our source material, this was the result of a very specific, deliberate policy, a Trump administration program that involved buyouts, layoffs, and early retirements, all designed to shrink the federal workforce.
And this chart, wow, it just shows you exactly how dramatic this was. This isn't some gradual decline, a slow trickle. It's a cliff, a straight drop. This one single event in October is the entire reason we saw that shocking headline number.
So, just to put this in perspective for you, these cuts brought the number of federal employees down to the lowest it's been since late 2014. That's more than a decade. But here's the thing. That's only half the story. Now let's see what was happening in the rest of the economy at the exact same time.
So while the whole government sector was making all these headlines with these huge cuts, the private sector, most other businesses, was quietly telling a completely different story.
Get this. During that exact same 3-month window where the government was cutting 172,000 jobs, the private sector, well, it added 225,000 jobs. That is a complete and total reversal of what we saw in the public sector.
And listen, this wasn't just some one-time blip either. The trend is actually getting stronger. The 3-month average for private job growth is now at its highest point since May. This is a really clear sign that the core of the economy is actually pretty healthy and still growing.
So this right here really puts it all together, doesn't it? On one side, you've got this massive policy-driven cut in government jobs, and on the other, you've got steady, even improving, growth in the private sector. It's truly a tale of two different economies. And if you only look at that one headline number, you miss the real story completely.
So, okay, what does all this mean for the people making the big economic decisions? Like, the Federal Reserve. Where should they be looking? Because let's be honest, their decisions on interest rates affect all of us. Everything from our mortgages to our car loans.
Well, Wolf Richter, who wrote the source article for this, has a pretty strong take. He says, the Fed needs to look at private sector jobs and not get distracted by federal government job cuts. Basically, he's arguing that they need to ignore the noise from those government cuts and focus on what really matters, the private sector. Because that's where you find the true pulse of the economy.
And the logic here is pretty simple, but it's powerful. The argument is this. Those government job cuts happened because of a deliberate policy choice, right? It wasn't because of a weak, underlying economy. So those cuts don't really tell us if the economy's in trouble. The private sector numbers, on the other hand, now that's a different story.
Okay, so let's zoom out and look at the bigger picture for a second. These job cuts don't just mess with the total number of jobs. Nope. They actually send ripples out that affect other really important economic stats. Let's take a look at how that works.
So here's how it works. It's a chain reaction. Step 1, those federal workers lose their jobs. Step 2, they don't just vanish, right? They start actively looking for new work. And step 3, the moment they start looking, they are officially counted as unemployed. And that directly pushes up the total number of unemployed people and the unemployment rate.
And that's exactly what we saw. The unemployment rate ticked up, rising from 4.44% to 4.56%. But here's the twist. That number, just like the big headline job number, can also be kind of misleading. There's actually a much better way to measure the real health of the job market.
It's called the Prime Age Labor Force Participation Rate. Now, I know that's a mouthful, but it's a fantastic metric. Here's why. It only looks at people in their prime working years, age 25 to 54. So it totally filters out all the statistical noise from, say, the huge number of boomers who are retiring. It gives us a super clear picture of how engaged the core of our workforce really is.
And here's the kicker. The most surprising part of this whole story. Despite all that noise from the government layoffs, this key metric, it actually went up. It ticked up to a historically high 83.8%. This is probably the clearest sign you could ask for that the underlying labor market is actually incredibly strong.
All right, so let's quickly recap what we've uncovered here. First, those big headline job numbers, super misleading. Second, the real story is this huge split between government job cuts and private sector job growth. Third, that private sector growth isn't just steady, it's actually getting better. And finally, when you look at the right metrics like prime age participation, the core of the job market looks really, really strong.
This all leaves us with a pretty interesting question, doesn't it? When one part of the economy shrinks, on purpose, by design, how do we even begin to measure our collective strength? I think the big takeaway here is that you just can't always trust the headlines. The next time you hear some scary number about the economy, it really pays to dig a little deeper and ask, okay, but where is that number actually coming from? Because in this case, the real story is that the part of the economy where most of us work is actually a lot stronger than you might think.